Thank you so much for the introductory remarks, which I think lead really nicely into this panel, where we'll be talking about some of the innovations we're seeing on the mobile money platform, taking advantage of the fact as well that there are a vastly increasing number of mobile phones in the hands of particularly the BOP around the world. We're going to be focusing on 3 themes with this great panel. We'll be talking about innovations in credit scoring and what that's leading to. We'll be talking about digitizing payments in the microfinance channel. And we'll also be talking about bulk payments. We're going to start by having each of the panelists give a brief introduction about their company and organization, what they're doing in this space, and then we'll launch into a discussion and Q&A. So let's start with Elio.
Thank you. Good morning, everyone. Elio Vitucci, working for Experian. I don't know if you know Experian. If you're in the US, you definitely do. What we do is we create data. We use the data to predict future events, so analytics, and then analytics transform into decision with software. We kind of ran the financial inclusion for the last 50 years, in the US first, then in UK and the rest of Europe. And about 3 years ago, we thought that we could actually play a key role in enabling financial inclusion in other markets. And so we created a division called Experian Microanalytics, which I run, dedicated to financial inclusion and using the same kind of tools and experience we have matured in the last 50 years in emerging markets. So it's a game changer, different data, and we really much focus on the gap between mobile penetration and financial penetration. And so anything that can help migrating or moving mobile money to a full set of financial services is something we're focusing on. So that's us in 2 minutes.
Great, thank you. Fatima?
Sure. Good morning, everyone. Fatima Popal from Roshan's M-Pesa, Afghanistan. M-Pesa, a mobile money operator, of course, running off of Vodafone's M-Pesa as well, but modified for the Afghan market. We work on a lot of different services, but today I'll be speaking more about what we have become a default service provider for, which is bulk payments and salary payments.
Great, Jonathan.
So, good morning. I'm Jonathan Hakim. I am the CEO of Signify. Signify is a data analytics and marketing company based in Cambridge, Massachusetts. But our clients are all over the world, in Asia, in Africa, in Latin America. Our business is based on the premise that what's required to unlock financial services for large numbers of underserved people is intelligence about them. And the biggest source of intelligence, the biggest social network, actually derives from mobile phones, from the way that you use your phone. And the way that people use their phones can be used to predict their creditworthiness, their likelihood to buy different types of financial products. So we work with mobile operators, with banks, with insurance companies in different countries to help them scale mobile financial services using a data-driven approach to qualifying customers.
Okay, Moeen.
Morning, everyone. I'm Moin. I'm the head of finance at bKash. bKash is about a 2.5-year-old company dealing with mobile money. We've got about 7.5 million customers with about 75,000 agents. The products in the portfolio is fairly basic. There's cash in, cash out, P2Ps, airtime, but essentially it's a cash in, cash out business that comprises majority of the revenue for Bangladesh. The objective of bKash initially is financial inclusion. And it's a bank-led model that we have there. Thanks.
Great, thank you. So we're going to start on the theme of credit scoring and using mobile phone records to create alternative credit scores that is allowing expanded financial access, particularly to the BOP and the unbanked. So to start with, it would be great to hear some examples, particularly from Elio and Jonathan, about where we're seeing these innovative credit scoring models in action and some of the challenges that we're seeing and also successes.
So I think, we talk about credit scoring, but I think it's also important to understand if the financial services, mobile financial services are going to scale, then we need to be thinking about the complete value chain. How do we acquire, qualify, contact, and then cross-sell customers in a data-driven way. Because unless we can bring down the cost of acquiring customers, even if we can credit score them, the business is not going to be profitable. So we need to be thinking about how do we insert ourselves into the whole value chain of mobile financial services with data. And that's essentially what we're looking at. So being able to test, market, bring to market, and understand the reception of new products by targeting them at specific customers based on their behavior, and then refining them in a very, very efficient way. So we work in this way with, for example, with a range of products, with credit cards, with insurance, with small-scale loans, nano loans, I think they're sometimes called, in the three areas that we're working in Brazil and in Mexico, where we've been active the longest. We have a very exciting project starting in West Africa and beginning to do stuff in Asia. And I would say the results from this are very encouraging, the early results from these in terms of our ability to increase response rates, to drop acquisition costs, to increase the efficiency of marketing, and to bring down the default rates on the portfolio.
Let me add also some of our experiences. We've been working at it for the last 2.5 years, and the real focus for us has been how we can offer a product, and I fully agree with Jonathan. Credit risk is only one component. We have to look at the overall chain, the value chain, and mainly the cost of distribution, the cost of servicing a financial product. Today, if you look, for example, microfinance, say you got a loan book of 100, the cost of risk is 2-3%, is very low. But the cost of operations, of running that portfolio, goes up to 20-25%. And it's incredible because microfinance really focuses on the NPL rate and actually doesn't look much on the cost of operation, actually is huge. So on top of that, I have to also cover my cost base and also have the cost of funding. So out of 100, my loan book, I got 10 cost of finance, I got another 20% of cost of operation, and a 10% cost of structure. So I have to charge 40-50% to actually start breaking even. I'm talking about effective rate. So anything can actually drive down the operation cost and still keep the level of risk at acceptable levels is something that we've been focusing in. So leveraging mobile money, the agent network, the information that's available, and trying to create an experience by which me as a client actually, I can apply for a loan and get a loan disbursed into the wallet has been really our focus. And in terms of data, we've been using typical prepaid data, so the way the client uses the phone, the top up, and so forth. We've been using data available on the distribution. So if you want to offer loans, working loans to retailers selling airtime, actually lots of information about them, how long they've been working on, the volume of sales. You can actually estimate for the sales of airtime, the total sales of the organization. So actually there's lots of info there. Plus the info actually you collect on the client himself. And all this is giving us a very good quality credit scoring system. And more importantly, it's allowed us to roll out operations in a very cost-effective way, at a fraction of the operating cost of traditional microfinance. The real example, the next example I want to quote is a project we've been supporting for the last 2.5 years called MBank Philippines. MBank is a bank that is minority owned by Smart, which is the largest mobile operator in the Philippines. They have 70 million subscribers. They've been doing mobile money for 10 years now. And the project was very much, let's take the retailer base of Smart. They've got something like 1 million retailers of airtime. Let's bank these people. And then once these people are familiar with the products, let's transform them into agents offering financial products to their own clients. So it's kind of a two-way approach. And using the alternative data, using additional data we collect from the clients, using the right SMS reminders for repayments, using many, many things, not just credit scoring. Today, the quality book is excellent. We're talking about less than 3% losses, but with the quality, with the cost of operation that is tiny compared to any other operation. So that's a business we feel is very viable, and we feel that there is a lot to be done in terms of financial inclusion, in expanding mobile money into a fuller provision of financial services. And by the way, the loan is the product that gets most traction. Out of 10 clients here, at the moment that they're proposing the loan, 4 become active clients. So you almost have a 50% kind of like a take-up rate, which is amazing for a financial product.
Great, so let's build on that and talk about the customer perspective for a little bit. So you mentioned some of the benefits, potentially from a customer perspective, for example, faster access to loans, potentially reduced pricing if some of the cost savings are passed on to customers. Could you say a little bit more about the benefits we're seeing at a customer level, and then also the issues of transparency and privacy? So we're collecting data on customers. How are we communicating the collection of that data to customers? What's the awareness at the customer level around privacy issues?
Yeah. So actually, at this conversation, even just before this session, the key point that we need to tackle is the KYC. So if a financial institution offers a credit product, can we leverage the KYC that already been done by the mobile money operator? If yes, great. It's a very seamless experience. If no, we have to find a way to KYC the client again in the most cost-effective way. The model we'll be enabling is once you've been KYC'd, so you're enrolled, you actually have a contract by which basically it's a master agreement with the financial institution. And from that moment, you can apply for the various products. So you can apply for a savings, for a deposit, for a loan, for an insurance product. And this is done through USSD sessions. So anytime you apply for a product, you choose the various variations that are available. You confirm that you're okay with it. You put your PIN code. And the application is processed real time. So real time, you get an SMS saying, yes, you're accepted. And if you're accepted and you go loan, the funds are disbursed on your wallet instantly. So user experience is very good. And it's quite interesting. Yesterday, there were some presentations about you're on the web, you're buying a product, and you abandon the basket. You have like a minute time span. And financial services don't think this way. Actually, the fastest and the smoothest you can be in actually offering a financial product, and the fastest you can be in closing a transaction, the better it is for the users and for the bank. Answering your transparency and data privacy questions, I think we should apply what's applied everywhere else on the planet. So I need to sign an express consent for my data to be used. So the way the system works is that I will sign and confirm by SMS or through the contract that I authorize my data to be used for this specific moment for this purpose. Data then is used, so we can collect all the data about the mobile usage. And in terms of transparency, I mean, again, it's pretty simple. If a client is not accepted or there's a rule, there's an issue, this is communicated to the client. So we tend to have a pretty transparent model in place, but we simply follow the rules that the market and the regulators are taking forward in the established economy. So we're not inventing the wheel here.
Great.
Yeah, I think one of the challenges here is that the regulations around mobile in particular and the use of mobile data were conceived in a time when nobody really envisaged that we could reposition data in the way that we're doing today. So I think there's a discussion that needs to take place here with regulators. Bank regulators are well aware of the use of data, but the mobile side, I think there needs to be a clear regime for data usage, which will allow the operators to start to leverage the data assets that they have in a very clear way. So the most difficult jurisdictions to operate in are ones where the rules are very unclear, and nobody really knows, where the borderline is between when does the customer have to opt in, when does he need to give his explicit consent. So I think my 10 cents on this would be clarity around privacy rules is at least as important as the actual rules themselves, and they will enable businesses like ours and Elia's to flourish in a way that's more difficult when you have uncertainty.
Yeah, I think the sort of example you used of the sort of express opt-in, opt-out is something we've seen work particularly with low-income clients who sort of may not be. Yeah,
some of the places where we work, for example, the customer is offered a product, and by expressing interest in the product, he then opts in to have his identity revealed to the provider. So there's at some point there has to be an opt-in in the process. Correct. Yeah.
Great. Okay, so shifting gears a little bit, we're seeing lots of innovation, particularly around the unbanked, the BOP. Do you see opportunity, or perhaps this is already happening, where alternative credit scoring models that leverage mobile data are being applied to higher value customers, higher ticket lending, so more OECD type markets? Is that happening yet?
Well, I think we're probably a ways off using mobile data for mortgage approvals, but we're already doing it in everything from insurance underwriting to credit card revolving loans. So I think across a lot of short-term consumer lending, it's directly applicable. Now, can you go from emerging to developed markets? We were talking before about the number of unbanked people here in the US. And there's clearly a data gap. And mobile is a potential source of that. We're not, maybe Experian is, but we're not addressing that market today. But in principle, no reason why not.
Okay, so I think it's at the end of the day what really counts is what we have available in the given market for a given lender and what alternative data can add in terms of uplift. So in terms of credit scoring, it's pretty simple. You have like some data, you have a future outcome to predict, and you see how this data allows you to predict the future outcome. In a data-rich environment, you got strong bureaus, strong data, you can build very strong models. In environments in which the data available is pretty thin or not available, any alternative data source can actually add in terms of predictive power. So the more you go into countries where credit bureaus are weak or they're only negative, where the information available in terms of the borrower is not very precise, cannot be controlled, alternative data is actually useful. As Experian, we do use alternative data. We'll be using alternative data for a while. The uplift in say, US and UK is tiny. It's only actually valid when you have people that got thin files. But when you go to emerging economies, this alternative data does help. And actually, as Experian, we're working on projects whereby we can create an organized way of collecting this alternative data and making it available to the entire set of lenders in a given country. So we've done, for example, a study supported by the Gates Foundation in Kenya, where we looked at over above the 2 credit bureaus that are available there, that are only negative, that move into positive. Can we use M-Pesa data? Can we use, well, the other mobile operators, mobile money? Can we use electricity, water? Can we actually use the aggregator data from the various agricultural, coffee, maize, milk, and so forth? And can we use all this data to create a profile? And the answer actually was positive. And we built some models, and we could see a real uplift. And so banks could then lend. They're not doing it today, but they could potentially lend using this alternative data in a far better way they would do with the current data they have. So that brings them uplift.
So there really is potential to take some of the innovations we're seeing in developing markets and apply them back to...
Especially in countries where there is not enough data available in the given country. Mm-hmm. Absolutely.
Great. Let's talk a little bit about going back to the unbanked or the BOP. Just curious to get hear your experience on a couple things. First of all, we know that in many markets, a household may have a SIM for the whole household. So you have a number of people who are sharing a SIM, and you may have the reverse situation, multi-SIMming. So how does that affect the development of accurate models? And then on a related note, I know Jonathan Signify can come up with an accurate predictive model with about, I think, 4 weeks of data, I read. So just curious, the different approaches you're taking, how much data you need to be able to come up with a predictive score, and then how we manage the issue of either multi-SIMming or a household sharing a SIM.
Well, I think you have to put this in context that with any kind of data modeling exercise, whether it's a very traditional, historical-based payments record, or whether it's using alternative data, you're always faced with the challenge that you're only seeing a portion of the customer's activity. And the same thing is true in other fields like retailing, where retailers collect data on a portion of the customer's shopping basket and use that to predict their overall habits and lifestyle. So we're always operating with a slice. And the question is that slice big enough to make inferences which can then be validly applied to their behavior as a whole. Now, so the same way that I do my shopping partly at Whole Foods, partly at Safeway, I also might have 2 SIM cards. If I can see my behavior on one of them, I can infer my total behavior. So I think there's a way to operate with partial data. When you talk about households sharing SIMs and so on, then it becomes more tricky. Then you have to, at a certain point, the predictive ability of that data becomes limited on its own. So then you have to start thinking about, are there other things we can add into that mix which make it more insightful? So there's no one good clear answer, but I think we're never going to be in a situation where we have a complete set of data on the individual's behavior.
Thanks.
Yeah.
Anything?
Yeah, I think I fully agree with Jonathan. As long as the data we collect predicts risk and adds value with what's available is important. We tend to score the SIM card as a concept. So SIM card is attached to the mobile wallet. So you got mobile wallet transaction, you got SIM card transactions. This set is quite good. The SIM card now comes with the client who's applying, and so you link the KYC might have done very badly or not at all on this prepaid card, but suddenly now you have a real link to this person, and you put the whole thing together. And if this information does predict risk, it means that even though it's a kind of shared a bit, so forth, actually the information that it carries is predictive, and we've seen that it's predictive. We also have models by which actually we can create some airtime loans or advances just on a SIM card. So it's almost irrelevant who is the person behind. You score the SIM, you score the user of the SIM, and the person's behind actually can work out the creditworthiness or the interest in purchasing a different product just from the SIM. So it's definitely doable.
It's interesting. So not necessarily a limitation at this point. Great, well let's shift. We may come back to some credit scoring questions later on, but let's shift to digitizing microfinance payments and talk a little bit about Bcash and your model and experience, but also sort of thinking a little bit more broadly about the trends we're seeing in this particular space. And one of the trends, of course, is that we've not seen, and there are a variety of reasons driving this, but we've not seen a big rush of microfinance institutions into the space of digitizing payments, and I think there are a few drivers for that. But it'd be great to hear your thoughts on sort of what the challenges are, why we're seeing sort of relatively little traction in terms of microfinance institutions accessing that opportunity, and then sort of your experience, obviously, which is a great success with Brock and Bcash.
Okay, we can understand this. Microfinance in Bangladesh is probably one of the more advanced countries, its leading economies dealing with microfinance. Microfinance is probably a 30-year-old business. Mobile money is like 2.5, 3 years old business. So they've got to learn to adapt to each other. In microfinance in Bangladesh, when this guy is actually going out, taking the repayments or making the loan payments, he's actually a part of the household. So the human touch is very important in the current context. I mean, he, besides microfinance, he's like a community leader, unofficial community leader. And he's actually being consulted on a lot of, he or she's actually being consulted on a lot of things. So on a piece of paper, mobile money in MFI sounds very easy, but it's going to take some time before people actually learn to adopt, to understand what mobile money is all about. And so essentially the biggest barrier I see is the people contact is necessary.
I just want to add something, because we also have repayments, loan repayments and disbursements through M-Pesa for Afghanistan, and one of our targets in markets that we work with are women, and it's because in Afghanistan many of the women that are business owners, they're very small business owners, then they work outside of their house and they're tailors, and they're restricted to leaving their homes or going into banks or being seen out into the public. So these loan repayments work very well for women that are business owners, because then they don't have to leave their neighborhood or their area. So most of the microfinance loans and programs that are in Afghanistan are dedicated to women first before they are given out to anyone. And so it's a good opportunity for us to work with a women's group and assist them in moving forward. So it's worked well for M-Pesa for us.
It's interesting. I think the human touch angle is something I'd like to dive a little deeper on. That's obviously been one of the sort of driving success factors for microfinance is this human sort of trusted interaction between the client and, they don't trust banks, they don't feel comfortable walking into banks, but they trust their local credit or field officer. So when you start introducing mobile, either disbursements or repayments or mobile savings, how do you still keep an element of personal or human touch into the process so that you don't lose that entirely?
Okay. As I said, there are about 75,000 agents in the country, in Bangladesh. And these agents are there at the village level. And so over a period of time, when people start transacting, understanding this mobile money business, these agents would be the ambassadors of mobile money at the village level. So over a certain time frame, people will start trusting and understanding and adopting this technology for them to use, taking loans or making payments through mobile money.
Fatima, anything to add on that?
No, I also agree. I think the agent network is extremely important in both Bangladesh and Afghanistan and other countries as well. They do bring that human touch, and that's what they're for. And they are at the village level, as stated before. And they bring that relationship into a place where electronically now a transfer happens, but they still hold that relationship.
Yeah, I think we've seen some examples of some microfinance institutions who've been really out in front and tried to go pretty quickly to sort of all mobile and removed the entire field officer infrastructure and then saw a spike in defaults and then kind of revamped and rejiggered the model to bring back in some element, whether it's working more closely with the agents to train the agents to work with this target population or other elements to make sure you don't lose that particular piece of the model. Another angle I'd like to explore is kind of the willingness and appetite of microfinance institutions to engage in this channel. And maybe, Bangladesh is an interesting example because you have some of the most scaled, sort of deeply integrated microfinance institutions in the world in the country. And in some markets in Africa, it's still much less mature. We have smaller institutions. They don't have the bargaining power or the leverage to even sort of open conversations with the mobile network operators. And I think that seems to be a barrier in some markets. Are you seeing any solutions to helping these smaller microfinance institutions either aggregate, band together, somehow be able to partner with mobile network operators in a way that is of interest to the MNOs?
Okay. Well, Bkash is a part of BRAC, which is the largest NGO in the world. And we are in contact or dialogue with BRAC as just to figure out ways or find out solutions where we can actually, enable or enhance this microfinance payments or through mobile money. We are doing a little bit of microfinance, but then as you said initially, it's not picking up. So we are in contact with the BRAC people to understand how we can actually spread through our agents, spread the usage of mobile money in microfinance.
In Afghanistan, one of the areas that we touch upon with microfinance institutes is we become a part of their branchless banking. So we're creating more branches for them because we're going into locations where they cannot put a bank branch or an MFI branch there because of the security situation, because of remote locations, because of the geographic locations altogether. So most of the issues fall there. Most MFIs are based in the main cities and district centers, and of course the beneficiaries are not people in the cities, they're rural. And so we become branchless banking for them.
So maybe following up on that a little bit, what is the commercial case for an operator to get engaged in working with microfinance institutions?
I'm sorry,
the commercial case from the operator's perspective in terms of working with microfinance institutions to digitize their payments. And and when you've obviously the unique model where you've brought in pretty much all the operators in Bangladesh.
Yeah,
and so what's
yeah.
from the operator perspective, how does the business model
I mean,
make sense?
if I can speak for Bcash, the way we work, they get a share of the revenue. So from an operator perspective, the way the business model is made right now is whether I do microfinance or whether I do merchants or whether I do it, they just get a flat percentage of my revenue. So essentially from that business model, I'm not too sure if the operators would stand to gain anything in particular, but with a different business model, maybe yes, they would be able to get. One more thing is the mobile operators, the penetration in Bangladesh is quite high. It's about 110 million mobile subscribers in the country, and there are about less than 15% banked people in the country. So that's my space of playing. So the mobile operators are already there at the pretty hard, deep root of Bangladesh.
From Rashan's perspective?
Sure. What we do is, depending on the model that we're using for whatever microfinance institute that we're working with, but if it's a branchless, then we're cutting their costs almost 52%. So we do.
Is that an example that
yes,
you? Yeah. Okay.
And it is transactional based on disbursements, and of course, if we're doing cash management for them as well, and that would happen if we're doing a branchless banking for them, if it's disbursements or. So it's more on a transaction on the loan repayment and disbursement, and then a cash management that we do.
Okay.
I just want to add something here. I mean, actually, being on when we started this Bank, we actually had the traditional smart money system, and actually, I lived like firsthand the difficulties of running an MFI with a system that is not really developed through to support the MFIs. Mobile money is mobile money, so it's been built to do mobile money. If you want to use mobile money to also start getting the repayments, which is the key thing, disbursements is okay, it's like one-off, but the repayments at a weekly or monthly, that's the key benefit for the MFIs and for the client. You need to put in place an additional kind of layer of capabilities to support the MFIs. Simple stuff. I need to know if the client has paid me straight away. I cannot wait a report coming from somewhere else the next day. This information is to be available to the loan officer there and there when he meets the client. I need to have the ability of tracing transactions. The client says he's paid, is he paid, is he not paid? I need to understand what's happening. I need to be able to, if the client has made a mistake, send the money to someone else, not to the MFI, I need to be able to reverse the transaction and so forth. So if you do all this well, so if mobile money operators actually add these other capabilities, it will become much easier, not easy, but easier for the MFIs to move into that. And then the MFIs needs to change the way they work. So it's, the human touch is key on microfinance. I come here to collect the payment. If this disappears, it cannot just disappear fully, but you can reduce the need of a human contact. You only contact the clients maybe every 2 or 3 weeks, and you only contact the ones that are not paying. But you need to rethink the way you work. You need to have automated reminders in terms of SMSs and so forth. So it's definitely doable, but if you take mobile money as it is, the MFI as it is, it's very, very hard for this new model to work.
What do you think are some of the sort of key opportunities there, though? I mean, I think we're sort of getting into some of the challenges, but what do you think are some of the opportunities down the road?
Opportunities are great. I mean, for the mobile operator, I will get 50, 100, 200 million more cash coming into my system. The wallets now, they get used, the clients get familiar with mobile money, they can do additional transactions, so I get much more liquidity into the system. So I'm delighted, and I also get the stickiness with the SIM card, which I want. So mobile operators make sense. In terms of the MFI, I can really reduce my operational cost, provided my cost of risk doesn't spike up. So I have to do it well. I can reach further areas. Today, MFIs work in urban areas simply because it's too expensive to go far away, it's too risky to go far away. So actually allows to go further and reduce operational costs. You take India, where, for example, now there is a limit in terms of what you can charge in terms of interest rate, and they calculate it well. If you look at cost of funding, they have to squeeze the cost in an incredible way to actually survive. So if you want to create a product that is more sustainable and more in line with traditional cost of finance in more established economies, you have to reduce operational cost, and that's what it's going to create.
Right. Great, so let's shift to bulk payments. And this is an area where we've been hearing there's massive potential, and I think we've seen some good examples, but it'd be great, Fatima, to get your thoughts on why operators generally have struggled to capture some of these bulk payment flows.
Sure. Well, so when M-Pesa came into Afghanistan in 2008, everyone looked at this P2P model and said, let's bring this over to Afghanistan and see if it can work there. Realizing that P2P was not in demand in Afghanistan. We have over 100-year-old system. It's a tribal system called the Hawaladars, which do all the send money transfers, and it's a very trusted system. So to break free from this takes a lot of time. And the demand wasn't there. What was in demand was salary payments. In Afghanistan, not only the geography, but because of the security situations, a lot of international organizations that have employees in different provinces were doing cash drops, literally a helicopter drop in the middle of a province or a city. And of course, when you do that, they're skimming. Money disappears by the time it actually gets to the right person. So the demand was there for some transfer system with payment. If it was either salaries, if it was stipend payments. We work with a lot of international organizations now that do disaster relief and humanitarian assistance. Because what they were doing before is the World Food Program was sending in trucks into Afghanistan, and these trucks would get stopped and half of all the items would get stolen. So now they go into payments to a specific beneficiary, into a specific location where we create merchants in those areas, and they can buy their food, oil, and eggs from that area. Salary payments was a big area that we touched upon, especially with government salaries. Government salaries, some of the police officers wouldn't get paid for 8 to 9 months at a time. So we started a program with the UNDP to move forward on salary payments, and police officers started getting paid on time, monthly, and they all actually thought they were getting promotions because they didn't actually know how much they were supposed to be getting paid. So it was an unusual demand that was there, and it still is. The model for M-Pesa in Afghanistan, like I said, by default has become a salary model. Is it one of the most revenue-generating models? No. Of course, because with salary payments and stipend payments and humanitarian assistance and disaster relief payments, electronic money has to be backed up with liquidity and cash. So who does this cash management? And of course, we have to do the cash management. So bulk payments has become extremely important in Afghanistan, and now it's become a cashless initiative that most of the NGOs are working on. Most of the international donors are working on as well, because they have realized that not only is it convenient, but it cuts costs for them. Logistic costs, like I said before, with MFIs it's over 52%, but salary customers are also over 53 to 55%. Organizations are seeing that the amount of logistics that they've spent to send money from one location to another, which mostly would all come out of Kabul into another province or a district, was being cut, and that money can actually get recycled back into the programs that are being built in Afghanistan. So.
Great, that's a fantastic example. What are some of the hindrances or challenges that you all ran into as you were starting to sort of operationalize this model? The technology challenges, what are the,
So one of our major challenges is Afghanistan has over 72% illiteracy rate. So you're dealing with over 72% of the population that has a lower than first grade education level. So reading and writing, even though it's very different than technical literacy, is still one of the major challenges that we have. So education and awareness on mobile money and how it actually works. 97% of the Afghans are unbanked. They don't believe in the banking system. There was a major issue, I want to say about 8 years ago, that a couple of the banks closed down and created a huge trust issue for the Afghans to understand how the banking system works and how their money can actually be put into a phone is quite a challenge. But on top of that, we have challenges that no other country has. Identification challenges, KYC. Most Afghans don't have passports or identification. They don't have government issued IDs. And if they do, it's not unique. So you can have the same identification on a passport that I do. So there's no unique number that separates it. The US government has come in with electronic government-issued IDs, but by the time that goes around in Afghanistan, it will take some time for that. We have challenges for women. Women don't have any identification. At least the men, we can get them identification. The women don't have any. They're recognized by their fathers' names. So it's another challenge to work on any kind of program to develop the women and bring financial inclusion for women. So we have security issues on a daily basis with certain areas in the country, if it's the south or the east or even in Kabul. So major challenges and roadblocks that we have on a daily basis that we have to just jump over. I don't believe that there are anything that we can't pass, but they are challenges that I would say no one else has with trying to move forward such a product.
Yeah, if it can be done in Afghanistan, it should be able to be done anywhere, right? You would
that's
think.
That's what I say.
Great, so I have a couple more questions for the panelists, but just wanted to see if there are any audience questions, any sort of burning questions people would like to get out before. Yes, in the back.
Hi, Lauren Sonovich from the GSMA. Fatima, could you talk a little bit about the role of the banks and whether they're supportive or resisting the deployment and how you can incentivize them more? And also the Hawala. Are they thwarting the effort, and could you also incentivize them?
Sure. The banks in the beginning were resistant on assisting us because they thought we were competition for them. But now the dynamics have changed. Roshan's M-Pesa was the first mobile money operator in Afghanistan. Now there's a couple others which I'm glad to say have come into the market just because of the education and awareness and assisting us with that. And what we've done is we're integrating into banking systems now. So people have the opportunity on their menu to do a push and pull of money off of their bank accounts as well. So the banks are assisting. They're head offices and agents for us, so they do get commissions on a transactional basis. So they provide most of the liquidity all over the country. So they do most of the salary payments and the cash outs and everything else. So they are cooperating. They're assisting us. They're working a little bit better, especially now that we do have this bank integration. It creates business for them as well because in Afghanistan, the government has signed a contract that most all government salaried employees have to go through a bank first before it goes to an MNO. So everyone gets paid into a bank and then it gets pushed into their cell phones or mobile operators that are integrated into these banks. So it creates a different kind of recycling business for them as well, and it brings more business to them. With regards to the Hawaladars, it's been almost a very historic tribal send money manner that most Afghans have been using. And recently, the government has approved it as almost making it constitutionalized that they're allowed to do this, so they become part of it. We do use them in many times with regards to larger bulk payments because they have cash on them at all times. The thing is that the commission structure needs to change for Hawaladars because they do make a lot more money being a Hawaladar versus working as an agent for a MNO. The commissions are too low for them on that side. So that needs to be reworked, but they're also at a moment where they think that we're competition for them. So we may take away some of their business. So they have to look at it in a way that it's more of a relationship that we're building and an opportunity for them that's increasing revenue for them as well. So yes, that's a work in progress.
Interesting question and reply. I think we have time maybe for one more question from the audience. There's one, okay, back over here.
My name is Godwin from Haiti, Digicel Haiti. In a situation where you find it difficult KYC customers, how does the credit rating stuff comes in there? And secondly, with the issue of the SIM life cycle, if it is very short, where within 60 days or 90 days, SIMs are recycled. How does that impact your credit rating system?
Okay. So in terms of KYC, I mean, KYC credit scoring are two separate elements. KYC is a regulatory approach. You need to KYC your client, end of story. So each country's got its regulation, and you need to KYC the client. You can use the credit score only once you KYC your client, so you can work with that client. So can you transfer a KYC that has been taken by a mobile operator to a financial institution? Some countries you can, other countries you cannot. Some also gray areas, so we go back to the discussion we had before. But KYC is a requirement that you need to comply with. Credit scoring cannot really help. Like a regulator will not accept a KYC built on scoring. We just want to have a picture, wants to have a proof of ID, wants to validate that the person we're talking to and we are banking with is Mr. X. In terms of data collect from SIM cards, if I'm the type of user that will top up, say $1, use it for 3 days, then forget the SIM card, then top up 2 months later for $100, and then use another SIM card and so forth. These are the kind of user that actually will change SIM card, will have the SIM card, the number will be lost. The information is pretty much useless. The information is useful when you are using a SIM card as your primary SIM card. You actually have most of your spend with it, and so we can see really how you spend it, how you top it up, and so forth. In that case, it's information that is more useful. On top of it, you also the mobile money information and so forth. So if you're typically a mobile money user, you don't lose your SIM card every 2 weeks. It's, you actually keep your SIM card. But the guys that, as I said, they are not primary user with you guys, Digicel, and appear and disappear, this information is not very useful, almost not useful at all.
Jonathan, anything to add?
Yeah, I mean, I think it's, in one way it's not useful, and in another way it is useful in the sense that it tells me something about the user's lifestyle if he's a kind of customer that throws away his SIM card every 3 weeks. So if I'm looking at the kind of customers that might qualify for different financial products, and I want to see people who have stable, predictable behavior in their lives, then that kind of behavior would probably be telling me that this customer maybe has an erratic source of income stream, he might have a different lifestyle to the ones I'm looking for. So it tells me something about him, which actually is a negative indicator rather than a positive indicator.
Yes.
So I think the flip side of this is that from the operator's point of view, clearly what they want is encouraging the contra behavior. And the more that we tie not only transactions but insights about the customer into the mobile network, the more we start to encourage stable, loyal behavior, which is clearly in the interests of the operator. So I think there's a virtuous cycle here which is possible, which the mobile financial services can help stimulate.
I think there's an interesting angle there too to how transparent can you be to customers about what's going to improve their credit history and rating.
Right.
So unfortunately we're out of time, but I want to thank the panel for sharing their perspectives on innovations on the mobile money platform, and I'm sure they'll be willing to answer questions after the panel. Join me in thanking them.